Guys, this is Mr. Oxy. It is November the 2nd. It is Tuesday. And today, much like yesterday, I'm not going to be wearing my Mr. Oxy hat. Yesterday, I wore my Mr. Energy hat and talked about 5 energy stocks that are reporting this week. They were, in case you didn't see that video, Continental, EOG, Devon, Occidental, of course, and which one am I missing? Anyway, 5 of them reporting this week. 2 of them reported yesterday, 1 of them reporting today, and the other 2 on Thursday this coming week. What I want to do today is take a little bit of time just to talk about uranium. Now, this is a fairly unique kind of category as it relates to energy, and I certainly would not want to think or have anybody think that I am recommending that you invest in uranium. It is super volatile. I know a few things. The demand significantly exceeds the current supply, as best we know. I also know that there are about 50 nuclear reactors, 50, more than 50, currently under construction globally, most of them in China and India. And of course, those countries with their enormous populations are absolutely starved for electricity. This beautiful picture in the background is Kazatomprom, who is the largest uranium miner in the world. And as you can see in this particular image, there is no vegetation. There is just uranium. And effectively, Kazatomprom is probably the primary driver of Kazakhstan's GDP. But let's talk about my basket of uranium stocks, because that's really what I wanted to chat with you about today. So I have a few. I actually have 5 different uranium positions, and you can see on this pie chart that I created, my largest position is Cameco. Now you can say, Mr. Oxy, it's kind of a safe bet in terms of, well, safe in terms of the volatile category known as uranium. And I would agree and say having a larger position in Cameco is relatively safe. We'll talk more about that in just a minute. And then you can see for the other positions that I have, my positions are more or less equal, right? So sort of between 10 and 16%. And this includes Denison Mines, Energy Fuels, Paladin, and Govx. So I'm going to kind of fly through all 5 of these and give you just sort of a highlights reel of my investment thesis. The first one we look at is Paladin Energy Limited. This is an Australian-based company, so I have to buy it OTC, over the counter. PALAF, PALAF, is my ticker symbol. It's not tiny. It's a $1.7 billion market cap, and you can see it's sort of on the higher end of the trading range. By the way, the previous slide that I showed you also shows you the actual dates when I entered these actual positions. So if you want to double check me in terms of saying, but how much did you pay for this particular stock? Those are the dates. Those are the dates I made the purchases. And you can always go back into their history and see what they were trading at on that particular day. So this is Paladin. It's currently trading at 64 cents. I believe this is a reasonably decent entry point. My initial purchase of Paladin was at around 23 cents. So it is served me well. It's been one of my better performing stocks. And in this particular instance, like with a couple of the others, I'm playing with the house's money. I've taken my personal investment off the table, and all I'm left with is the house's money. The company, and this is, as I said, a highlights reel, so I'm doing a quick flyover here, has no corporate debt and held $40.5 million of cash and cash equivalents as of September 2021, following the sale of shares held in Lotus Resources. So the fact of the matter is the company has no debt, it has cash on hand, and it has inventory. It owns a mine in Namibia and the Langer Heinrich mine in Namibia. It has assets, it has cash, there's no debt. This is not really high risk from the point of view of Paladin specific. Companies with no debt generally don't seem to go out of business. How about Energy Fuels? Much like Paladin, also not too small, $1.3 billion in market cap. You can see it's sort of trading at the high end of its 52-week range. So currently the price is around $8. My initial purchase into Energy Fuels was only at about $3.50 or so. But then I made a couple of purchases after that, which obviously moved my cost basis up a little. And I have also, much like my example of Paladin just a minute ago, I've also exited my initial investment position, which means whatever remains is the house's money. So I have a nice substantial position in Energy Fuels, much like Paladin, which is the house's money. So if it goes up, that's great. Every time it goes up, it causes me to at least have a smile briefly before it crashes again. But my risk is mitigated 100% because I'm playing with the house's money. Energy Fuels is a uranium business. Its core business is uranium. Energy Fuels is the largest US producer of uranium, the fuel for carbon and emission-free nuclear energy. The next arrow then on the left-hand side, rare earth elements, REE. We began recovering rare earth elements in 2021. That's this year, used in electric vehicles, renewable energy, batteries, and other technologies. And right at the bottom, financial strength, cash, securities, and inventory of almost $100 million, including 691,000 pounds of US produced uranium and 1.672 million pounds of vanadium. So once again, like my previous comment, companies that don't have debt and have cash in the bank and own some assets and inventory generally don't tend to go out of business. So even though it's high risk and super volatile, lower risk because of its financial standing and its strong balance sheet. How about this one? Govx Uranium Inc. is based in Canada, actually headquartered in Montreal, if I remember correctly. Their market cap is only 189 million, and as a result, it trades on the TSX Venture Exchange. Much like my example of Paladin, I have to buy this one over the counter as well because it only trades on the Venture Exchange, and it's currently sitting sort of just left of the sort of high, or let's say just right of center in terms of the middle of its range, its 52-week range. I think from memory, my initial purchase into Govx was at about 16 or 17 cents. So this one has been reasonably good to me as well, even though it pulled back sharply after I made my initial purchase. Govx, like Energy Fuel and Paladin, is also an equity where my investment is the house's money. I have zero risk. Now, if we look at Govx, you can see that unlike Paladin and Energy Fuels, it doesn't have no debt or zero debt, but certainly it has cash on hand of approximately $9.3 million and debt of about 6.5. So reasonably strong balance sheet, a strong quick ratio. I'm not sure off the top of my head what the interest coverage is in terms of the ratio. The other thing that's interesting to me here is that it is 12% owned by Denison Mines, 11% by insiders. So there's a good chunk of Govx, which is actually owned by one other mine and by insiders. I like it when insiders hold a strong equity position in the company that I am also invested in. So not as financially sound as the other two, much higher risk, but kind of okay. Then there's Denison Mines. This one gets a lot of attention, from the Wall Street Bets guys, the Reddit group, etc. One of the reasons why it gets a lot of attention is because it's so cheap. For the longest time, Denison was trading in the pennies. Like you could snag yourself some Denison shares for 20 cents, 30 cents. I missed out on that one because I didn't get into Denison early enough. But I am holding Denison right now. Denison is much like the first examples of Energy Fuels and Paladin, not too small, at a market cap of about $1.4 billion. And it's trading on the higher side of its 52-week range. I would not be surprised to see Denison pull back a little, but I would be surprised to see it pull back below $1 per share. So in terms of where it's at right now, it's okay. It's one of those stocks where you could potentially say, I bought this for $2, when one day in the future, if you're patient enough, brave enough, you could have a stock that's trading at $10 or more, or whatever the case might be. CFRA, the analyst, says Denison Mines, from a valuation point of view, is negative. You should sell it. Its quality is negative. You should sell it. Its growth is negative. You should sell it. And the street sentiment is negative. You should sell it. So it would be very brave for me to say you should buy it when, from a valuation, quality, growth, and street sentiment and point of view, it is negative. And smart people, unlike me, say you should sell it. You can see at the bottom of that red square that the price momentum has been positive. And right at the bottom of the screen, the way I put the red arrow, you can see that the market size risk and the financial leverage risk is moderate. The price volatility risk is high because this thing is bouncing around and going up and down like a bride's nightie. But the liquidity risk, on the other hand, is low because, much like the previous examples I shared, we do not have much exposure here to debt, and the cash on hand is pretty good in terms of the overall situation. Here's my big one, big in relative terms, because Cameco has a market share of $10 billion. This one has a liquid stock. For me, I can buy it basically on the New York Stock Exchange or the Toronto Stock Exchange. I have accounts in the United States and Canada. Its 52-week range is on the high side of the range. It's currently trading high. Many analysts say it's overvalued right now at the current price of about $25. And right at the bottom on the left, you can see the historic volatility is 56%. So it's actually not as volatile as some of the others that I shared with you. But this is Cameco. It's also been reasonably good to me in terms of performance. I think my entry on Cameco was at around $16, $17. So at $25, it's generated a reasonably good return for me over the last few months. Cameco offers low risk exposure to the uranium market thanks to its diversified uranium sources. Raymond James says, these sources are supported by a portfolio of long-term contracts that provide some downside protection in periods of depressed spot uranium prices while maintaining optionality to higher uranium prices. It says, the investment bank adds that as well as its working portfolio, the company has multiple operations curtailed that can be bought back should uranium prices increase. So guys, that's a wrap on 5 uranium stocks. So the picture in the background right now is actually Cameco's mine, which is called Cigar Lake in Saskatchewan in Canada. If you like my content, please subscribe. And as usual, I look forward to your comments so we can get some conversation going here. As I said at the beginning of this video, the last thing I want to do is suggest that you should invest in uranium. For me, this is the sort of speculative part of my portfolio. And even though I'm prepared to allocate some cash to speculation, I still mitigate my risk to a large degree. And in the instance of my uranium basket of 5 stocks, I've actually owned other stocks before as well, by the way. I owned a stock called, most recently, Azincourt. And I bought that one for 7 cents and sold it for 8 cents. So unless you own a few million shares, it's not really material. But anyway, this is kind of my play money. However, so even though it's in my speculative portfolio basket, I still mitigate risk. So on Paladin, Energy Fuels, and Govx, I made an initial investment. That investment just exploded over a very short period of time. I exited only enough shares to take back my cash that I had originally invested, and therefore the house's money remains. So on those 3 stocks, I have 0 risk. On the other 2, Denison Mines and Cameco, I need to mitigate my risk in a different manner. Rule number 1 is never lose money, and rule number 2 is never forget rule number 1. So however you play this, if you do, make sure that you get yourself into a position where you are not putting money that you need at risk, especially not money that you might need in the short term. So guys, that is my story for today. Thank you for watching. I'll see you guys soon. Bye-bye.